Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Thursday, the 1st of September. Starting off with the FTSE 100, it looks as though we've got support at or towards at least the 6750 zone. That was the last low, well, the last low there for the other week was 6779. Might be a little bit of an overshoot towards 6750, but really that was 6750 to 6800 was resistance in July. Looks like it's coming in as support for September. Be cautious on the bull argument. You wait for an end of day close above the 10-day moving average at 68.38 before targeting a retest of the best levels of the year to date at 69.55. On to the DAX, and similar situation with old support becoming old resistance becoming new support. 10,400, 10,500 was support resistance on the way up, now coming in as new support. We've got rising trend channel here from let's say the middle of July heading towards the 11,000 zone, and that really is the target over the next month, especially while we hold 10,500, which at the moment it looks like we will. We've got these multiple RSI support points towards the 50 level, RSI 57, so that does suggest we're in the accumulation area at the moment. On to the Dow, and here slightly messy over recent sessions, but good hammer candle for Wednesday's session, bouncing also towards the previous 18,300 support area from the beginning of August, and the 10-day, rather the 50-day moving average at 18,311. While there's no end-of-day close back below the 50-day line, we're looking for at least a retest of the top of the range, 18,600 plus. You might want to wait for an end-of-day close above the 10-day moving average at 18,491 if you're cautious, but really this looks like a sideways range, which is arguably one of the more simple situations to trade. For the S&P, also range bound towards the 2160 level at the moment. Great hammer candle there for Wednesday's session, and looks as though there should be follow through. There normally would be follow through for Thursday, up to 2180.90 at resistance. We need a clearance of 2190 to give us the next leg up, which could be significant towards the 2250 area, which would be a June resistance line projection, which I'm just currently drawing at the moment. So basically looking pretty solid there for the S&P. RSI at 50 as well also suggests that the technicals here are half full rather than half empty. For the Nasdaq, it's been the stronger of the three main US benchmarks. Support there coming in towards the 4750 level as expected. The top of that, rather the bottom of that gap there, 4749. So we just avoided fitting that in yesterday's session, but 4750 should hold as support, and while it does, up to the best levels of the year to date, 4830, 4840 over the beginning of September. For the currencies, we're obviously waiting, as we are waiting with the indices on the next and the non-farm payrolls tomorrow. 50-day moving average on cable, the key at the moment, what's that, 131.50, so end of day close above that is required. Still a bit early to suggest that it's a done deal as far as breaking through that, but I would suspect that's going to break relatively soon. There doesn't seem to be any real negatives here for cable. If you're cautious, maybe wait for 132 to clear, which is that resistance line from June, which is the neckline really on this possible reversal formation since the Brexit vote. For the euro, we had the 200-day moving average coming into focus yesterday. That's still in focus now, 111.20 for that feature. Looks as though support will come in at or above that over the course of the rest of this week. You can draw a line there from the end of June running through towards the 200-day line. So at the moment it looks as though above the 200-day line, back up to 114, which is the top of a rising June trend channel. If you're cautious of this market, maybe wait for a break back above the 20-day average at 112.08 before pressing the buy button. Dollar yen continuing to be distancing itself from the 100 yen area, basically a triple bottom there for this market at and below 100, so pretty strong formation. Above the 50-day moving average at 102.64, heading back towards 106 plus, which is the July resistance area. So reasonable risk reward set up on that market. Finishing off with gold, which is rather sickly at the moment. Really, you can see that it's just fishing for stop losses, fishing for weak bulls here. I would say there's still a risk of a 112.80 move down to 112.80 just to stop people out who are buying towards 1300. But really, as long as we're above that area, one would expect the uptrend here to resume. We just need to get the non-farm payrolls out of the way. But line of support there from February running towards 1280, and as long as we're above that, this is a buy on a dip rather than selling to strength. If you're cautious on this market, you wait for a break back above the 10-day moving average at 1322 before going long. That's it from me. More updates at the same time tomorrow.